Good morning. Happy Monday. Seafried with the morning grain comments. Well, as fast as the grain markets rallied on weather and Chinese demand and uncertain about U.S. 21 and 22 supply versus demand, the market has quickly erased some of those gains. I think the two things that were a factor in the last few days has been, number one, the weather. U.S. weather has turned normal, and the 6 to 10 day, 8 to 14 day, and even the 30-day NOAA weather is talking about normal rains across the Midwest with temperatures maybe a little bit above normal. That is perfect for the crops. They're maybe 85% planted in the corn and 65% planted in the beans. There was also one private guess that corn acres could be as much as 96 million acres versus the USDA's 91. That would erase any new export demand or increase ethanol demand the U.S. might have picked up either because of the dryness in Brazil or improved margins and more people driving here in the U.S. Second thing is that I think that China has come out and talked about trying to lower the price of commodities. And I think that they're watching speculators and hoarders in the futures market. And that kind of set the market back a little bit. We also had the Fed come out with talk about maybe higher interest rates down the road and less accommodation. And that also could impact long-term the demand for energy and also for commodities, especially in the grain side of things. So with that better weather pattern, thereby beans are testing $15. Corn is trading a little bit below what some people think is key support, and also the wheat market is also trading below what people think is support. As far as the beans are concerned, we still look at positive crush margins here in the U.S. to tighten the old crop supply. In the corn market, higher exports, higher ethanol demand, higher feed use is also tightening old crop supply, and the corn basis remains relatively strong, while the bean basis of late has weakened a little bit. For the wheat market, wheat prices are not competitive for other origins, especially, let's say, French, Baltic, and maybe even new crop Russian. The Russian situation is somewhat confusing. We're not sure exactly how much they're going to export, and we're not sure how much, whether their prices are going to be competitive, especially versus Europe. And last week we saw the Kansas Wheat Tour come out with a record high for the 20-year tour, 58 bushels per acre, versus USDA's number that they recently put out in May of 48. So I think all these things are contributing to the sell-off in the marketplace, and the managed funds are reducing their positions as the market slides lower. So I think in general, we got, if you're a bull, you have to wait for a change in the weather. If you're a consumer, you probably want to take advantage of these lower prices. And speculators should probably wait and see what happens as far as weather down the road to see if the grains will move higher this summer. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.